to you both. Lasse, for our audience that does not know what DeFi is, can you explain it?
Decentralized finance, DeFi, really just means that it's financial networks and financial applications that could be so big, or that are so big and so important that it's extremely important that they're very, very secure. That there's a sovereignty aspect to being part of that network. That network that I depend on can't just be taken away from me, that use. And then the third part is that it's impossible for someone to be the middleman, and the disintermediation is pretty much 100%.
Okay.
I think, Nisa, if I could, just to add to Lasse's description of DeFi, what we're seeing is the creation of a bunch of instruments that exist in the legacy financial system, but are being replicated here on chain. The great thing about this technology is that it's programmable, and so we're getting a lot of innovation that's not possible for a lot of the reasons that Lasse kind of touched on. You can remove the middlemen, you can get rid of fees, and you can have business models that were previously not possible.
So you're both investing in the space currently. What is your thesis?
So I'll start. I'm a geneticist by training, and our thesis draws a lot from biology. You hear people talking about the DeFi ecosystem, and so you can look to even ecology actually to inform, or we do, to inform our investment management decisions. And what we see in this space are particular niches. So a niche, for anyone who doesn't know, is just the functional position of a species within an ecological community. And I think, blockchain technology has come along and created new niches. And we're seeing Darwinian mechanics at play. So, it's a lot of survival of the fittest, natural selection, and it's not necessarily the strongest or the smartest or the fastest projects that are going to work, or that will prevail, but those are the most adaptable and are most easily able to change. And this brings us on to kind of governance, and I'm happy to speak to governance a bit later, but our thesis really is that governance allows for this evolution and adaptability, and therefore the ability for these new money blockchain species to fill these new blockchain niches.
I love it. I never heard a geneticist define the space before, and it's fascinating to hear how you characterize it. So given the recent hacks or the stress test that happened Black Thursday, do you think that set the space back in terms of trust?
I think we've definitely seen a decrease in activity since, for overall sort of DEX trading volume, volumes in general across the board are down a little bit. I think it's picking up again, but I think it definitely, it was also, I would say maybe before we had pretty uninformed optimism. Lots of people were not doing a lot of due diligence, throwing, money into any protocol that had some yield. And turns out, there are nuances to that. Some protocols are safer than others. And even something like Nexus Mutual isn't just a blanket, you get paid when anything goes wrong. Yeah, so I think it definitely, it gave everyone a bit of pause. Volumes have been hit across the board, but they're coming back up now.
Yeah, and I just want to remark that, we need events like Black Thursday to come around so that we can stress test the system, identify flaws in some of the protocols, and ultimately strengthen everything and the whole ecosystem, and optimize what are very experimental technologies.
So to date, Ethereum with the smart contracts has been the leader in DeFi, and recently there have been more attempts to bring Bitcoin to Ethereum or WBTC. UMA is a project that's created the first synthetic token to track the relative value of ETH to BTC. What do you think of these initiatives?
So I think it shows that, you know, pretty much every other chain also is trying to connect to Ethereum, building bridges. You know, there's attempts now to bring Bitcoin to Ethereum, and you know, Wrap Bitcoin has been around for a long time, but now all of a sudden it seems to be starting to take off. I think it really shows for the strength of the Ethereum sort of DeFi ecosystem. And I, you know, personally think it's great that we get many different forms of collateral into this sort of DeFi ecosystem. So I, you know, whether I have my maybe some reservations long-term about Bitcoin, I think in the, you know, for the next 5-10 years, I think it's fantastic to bring different forms of collateral onto Ethereum.
Right, and the technology that's being used works for Bitcoin, but it will work for other chains. So, you know, you'll have Zcash coming on into the DeFi space, which is great, because I think one of the flaws on DeFi at the moment is privacy. And, you know, so there are different examples as well for these different types of deploying Bitcoin onto the Ethereum chain, and some of them are centralized. Wrapped BTC is a centralized version. Some of them are decentralized. They each have their advantages and disadvantages. But again, it's coming back to this survival of the fittest. You know, it's great having all of these different options introduce themselves, and I think over time we'll see which of those is most suited to this use case. But you know, just to reiterate what Lasse said, it's very important to bring, you know, all of that economic value held within the Bitcoin network into or onto the Ethereum chain, and then be able to collateralize that value.
So looking at exchanges, Uniswap version 2, I think, is the largest decentralized exchange on Ethereum mainnet, updated to increase profitability for liquidity providers. Do you think DEXs are going to look and feel a lot more like centralized exchanges, but that they will retain their non-custodial and censorship resistance?
James, you want to go ahead?
Yeah, so, you know, centralized exchanges are, to all intents and purposes, order book matching engines. I think the great thing about decentralized exchanges is we're seeing a lot of experimentation and new models. So you mentioned Uniswap. This is an automated market maker. It utilizes bonding curves to set the price rather than order book matching. I think, you know, the DEX ecosystem is going to be much more vibrant than the CEX ecosystem, and more innovative. And you know, if we can see appropriate incentive mechanisms that can build up the liquidity appropriately, then that's great. I think one of the problems at the moment is that we're still experimenting with what are the best ways to incentivize liquidity. And, you know, the problem with DEX is at the moment, they kind of fail around low liquid pairs. So that's certainly something that needs to be solved. We are seeing innovation from projects in the space like Loopring, who have incentivized market makers. They are utilizing zero knowledge proofs to reduce gas fees. You know, this is one of the problems. To be a market maker, you need to post orders, right? And it costs a transaction fee to get an order up onto the books. And then it costs another transaction fee to remove it. So you don't have the same flexibility you do have in centralized exchanges. DEX there's a different architecture, it's a different landscape, there are different niches, we're going to see different products and different solutions. And, you know, I think both will sit hand in hand together within the environment.
So I think we're already seeing some areas where decentralized exchanges are really blowing their sort of centralized versions out of the water. There was a few months ago already, just so someone did a video comparison. One window was Binance and the other one was trading on Kyber. And it would just, you know, Kyber, click buy, MetaMask confirm, done. And on Binance, you know, log in, 2FA, go to deposit, send the tokens there, wait a couple of minutes for the confirmations, go trade. Okay, then withdraw, 2FA, email confirmation, da da da. It took about, I think, 15 minutes in total versus Kyber like 20 seconds. And including the fees on Binance actually got a way better price overall in Kyber. coming back to also what James said, just the innovation that is happening in the centralized exchange space organically, there's no company that can ever compete with that. Employees get their salary, they might be somewhat motivated, but most of them, you cannot have these thousands of people that are highly intrinsically motivated, spending all their saved money to fly around the world to go to hackathons. And, you know, it's like the opposite of corporate. Like, they're not even getting paid, they're actually paying to do these things. And you can't compete with that. And the first examples is also these automated market makers that James mentioned. That is really a radical innovation, and it completely flips the model around where you don't have an order book anymore with always spreads, right? So there'll always be, on order books, you will always have a spread because market makers need to cover their costs and the risk, et cetera, what they're taking. And so you basically get down to almost essentially zero slippage, and anybody can become a market maker. Now, Uniswap with a very generalized curve for everything is hard, I think, to go beyond, you know, long tail tokens and buying $50 of them. We're seeing with Curve, for example, the first asset optimized market maker, automated market maker for stable assets, and it's just impossible to compete for Binance, anybody else, no OTC desk, nobody can compete with Curve on swapping, you know, USDC versus Tether, for example. And so we're starting to see sort of specific, sort of, I would say, like asset specific exchanges that are just like vastly better than decentralized versions.
So what about any regulatory issues like KYC, AML?
Yeah, so I think there's always this looming thing like, okay, when do these standards that exist in the real world will be applied? And the simple answer for us is that actually it is vastly superior. Blockchains will enable KYC in a vastly superior way than we have right now. If you're sending a file of your scan of your passport and some you know, some like utility bill and sending that 50 times all over, it's just, if you know, you just know this is like way the past, right? So I think eventually they come down, depending on the country. You have a wallet, it is KYC, the utility bill is there. That adds whatever, an NFT or some other form of identity, and then the DEX sort of knows, okay, this is a KYC wallet, can trade here. This is sort of the Orwellian kind of like long-term option, but it would be vastly more efficient and possible with blockchains. I hope we don't have to go down that route. Maybe the KYC just stays on the fiat on-ramp and off-ramps. Until some point, there isn't really a distinction anymore between the fiat world and the crypto world, and it's actually all money, you know, real money, even in terms of regulator side. So I think those are the two scenarios I can see. On the other hand, also you have, you know, the Uniswap UI is on Arweave. That means it's there for the next 300 years, including hosting. So nobody can really stop this anymore. The smart contracts on Ethereum, you can't stop this either. So at some point, you also have to see as a regulator, as a country, like, unless you want to be China, you know, you're not going to be able to stop this. And the thing is, even if you're China, you can't really stop this anyways.
Right. Yeah, there aren't companies, there aren't individuals for the regulators to come after. These are deployed smart contracts. They, you know, if they're on Arweave, they're going to exist for all of our lives. And you have this almost, I guess, it's a kind of shared recognition by regulators now that there isn't much that they can do to stop these things. You know, there have been instances, I think Ether Delta, where there was an individual who they could target, but ultimately these are crypto networks, okay? They're global, they're open source, and they just can't be banned. So you've got almost like this game theoretic kind of viewpoint from the regulators, where it actually makes sense to embrace crypto, because if they ban it, people are just going to go elsewhere. And I think this happened with a lot of developers in New York or in the States when they introduced the BIT license. You know, other jurisdictions are going to compete for this business and for this innovation. And these are protocols, right? They can adapt and evolve around legislation far faster than this legislation can be written into law. So they're always going to be ahead of regulators. Regulation's good. We've seen lots of positive movements from the regulators in the US, the SEC, the CTFC, in the UK, from the FCA in Germany, in South Korea. ultimately, countries who have tried or who have had harsh regulatory stances have ultimately done a U-turn. You just have to look at China and India as a more recent example.
Mm-hmm. What about other issues beyond hacks, like network congestion or privacy or chain splits? Anything that you think about?
Well, so Ethereum, as far as I'm concerned, has really captured the DeFi space. I think, you know, the composability within means that any developer is going to develop on the Ethereum chain. There are issues with Ethereum that it could mean that it loses its crown. And I think one of the biggest threats at the moment is a contentious chain split. Because you have, in a lot of these DeFi protocols, you have individuals who are staking Ethereum or other types of collateral. If a chain splits and it's contentious and there are two forks of Ethereum, you then have these two DeFi protocols sitting on these two separate chains, but the value of the collateral could have halved or 40%, and it could have gone below a liquidation level, and you'd have a cascading liquidation event. So, you know, I think the fact that Ethereum is still forkable is an issue. It's where other chains that aren't forkable may prosper in this area, like Tezos. You also mentioned privacy. I think there are some very interesting innovations in the Ethereum space that are addressing this. You've got Ren, whose main net went live today, where, you know, in time you'll be able to wrap up Zcash, so you'll have exposure to the privacy pool there. You've got Tornado Cash, so these are mixers that also use zero knowledge proofs to create the privacy. You've got other interesting projects like Aztec as well. So privacy is going to come, but, you know, at the moment it's not nice. You got to be careful with your addresses and what you do on those addresses, because anyone can trace back the ownership of your assets and what you've interacted with in the past. So I think privacy definitely needs to be improved here.
Well, great. Fascinating discussion. Thank you for joining us today. We look forward to talking to you again.
Thanks for having me.
Great. Thanks a lot.